Hi there, welcome to kneppyinvests. A bit of a different video today because I'll be reviewing a video that I did in mid-November 2020. So I won't actually be reviewing the video itself. What I'll be doing is reviewing the turnaround potential of 10 companies that I focused in that video. And the whole purpose of that video was these 10 companies that I featured in the video had just been put onto my turnaround watch list. And my turnaround watch list features companies whose share price looked like they were turning around from a downtrend or from a consolidation period. And I just want to see if that signal of these companies' share price potentially turn around actually did come to fruition. So let's get stuck into it and look at the first company, which is Downer. So what I'm going to do is show you two charts. The chart from mid-November 2020 and then the updated chart, and we can see what's happened to each of these companies' share price since mid-November 2020, which is about 5 months. Now what we'll also do in the updated chart, I'll just circle the share price when back in mid-November 20, so you can actually see what has happened to the share price since then. So the chart for Downer actually did look quite bullish when I did that video back then. We were seeing a higher low setup and a developing uptrend, which I show you there with that sloping upwards grey line. And the share price was $5.20 in mid-November 2020. So what has happened to Downer since then? Well, nothing much at all. In fact, the chart for Downer looks quite uninspiring. And I've just circled there with that black circle the share price back then in mid-November 2020. And in fact, the share price has gone backwards. It's gone from $5.20 to most recent share price, $5.04. The high during that period was about $5.85 or $5.90. So there was a bit of upside there if you sold at the right time, and everything's in hindsight here. So you do have to sell at the right time. So no uptrend really developing here. In fact, the uptrend was broken in late February at around $5.30. You can see the share price falling through that uptrend, and that would have been the time to sell. The only reason I'm interested in Downer right now is because the chart is in fact looking quite bearish, and if the share price of Downer falls through $5, that would be a very bearish sign moving forward for this company, because that level is quite a powerful support level. You can see back in October the share price got to $5 and then fell back, and then it pushed through $5 in early November on high volume. So that was the breakout in the share price, and over the last 3 months it's tested $5 5 times. So it keeps testing $5 and pulls back on a little bit of volume, and eventually, in my opinion, it's going to fall through $5. And if I was a shorter, that's the time to short Downer. On to Webjet. Now, back when I did that video in mid-November 2020, that's just after the time we had all that news of vaccines, how effective they were, and a lot of COVID-19 affected companies like travel companies, more companies, that sort of thing. We did see their share price run quite hard for a while there, and Webjet was definitely one of those companies. In fact, the share price rose from $3.50 in early November to $5.09 when I did that video, and that horizontal grey line was a fairly good level of resistance, and the share price had just gone above that. So I was thinking at this point in time, it's broken through that level of resistance, and that had become level of support. So did the share price of Webjet turn into an uptrend? Well, let's have a look at the updated chart. And this is the updated chart, and just like Downer, an uninspiring chart this is. In fact, the share price has gone sideways, and I'll just circle there is the circle of the share price when I did that video. In fact, the share price has gone almost sideways. I think the share price was about just over $5 back then, and it's $5.17 now. We did see the share price go for a bit of a run just after I did that video. In fact, it went from $5 to $6 fairly quickly in about 2 weeks. So about a 20% gain in a short period of time. But yeah, no uptrend has developed with Webjet, and this company is no longer on my turnaround watch list. Next company I want to look at is a small cap retail company called Mosaic Brands. It did look like there was a breakout potentially occurring a few days before I did a video in November, when the share price pulled through a level of resistance quite easily. That resistance became support at 75 cents. Share price then was consolidating at 90 cents. When the share price pulled back a few days later to 80 cents, I decided to take a position in this company, and then I held on to that position for a few months. The reason I sold out was because I realized there was a significant financial red flag in their financial statements, and I cannot justify hanging on to or holding a company with such a significant red flag. I won't talk about the red flag in this video. Maybe I'll talk about it in another video. So what has happened to the share price of Mosaic since November 2020? Well, the share price has gone sideways. In fact, backwards a little bit. When I did that video in November last year, the share price was 90 cents and most recent share price was 79 cents. We did see a bit of a gap up in the share price in mid-January with a trading update, but that was not a breakout in the end because the share price has retreated back. In fact, when they released the half-year results in February, the market did not like it at all, and the share price fell from $1 to 80 cents. That horizontal grey line was at level of support at 75 cents. That has held on, so that could be a potential buy if you do like this company. But when I looked at their financial report in February, that significant financial red flag is still there. Next company I want to look at is Media. Now, we were potentially seeing a new uptrend developing here, which I show you with that sloping orange line to the upside. Share price got to as high as $1.60. And again, this was looking like it was breaking out. A potential buy here. I had this on my radar. In fact, I've had this on my radar, or this company on my radar, for about a year now, but I've never taken a position. Something's just been holding me back. So did I make a mistake not taking position in Media? Well, no, not really, because the share price has really done nothing in the last 5 months. In fact, when I did that video in November, the share price was $1.60, and currently the share price is $1.73, and that developing uptrend was broken in late January at $1.60. So another very uninspiring chart, and so every single company I featured in that video in November is just an uninspiring example of a potential turnaround story. The next company on the list is probably the most important company to talk about in this video, and that is Michael Hill Jewelers, because I did actually end up taking a position in this company for one specific reason, and that reason differentiates Michael Hill from all the other companies in this video. Now, I didn't take any other positions in any other companies apart from Michael Hill and a very small speculative buy in Mosaic. So what differentiates Michael Hill from all the other companies? So all these other companies and Michael Hill had potential signals of a breakout or a new uptrend developing. But there's one thing that's put Michael Hill above all the other companies, and that reason was they were issuing positive trading updates. And when they issued the second positive trading update, I took a position at 50 cents. So did that decision pay off in the end? Well, yes, it did. So the share price has gone from 52.5 cents when I did the video in November to the current share price of 82.5 cents. So a significant rise in the past 5 months with Michael Hill. Now, I've sold out of my position subsequent, but I did sell out at a profit, and I've taken another position in another company. So no regrets with selling out of Michael Hill, but maybe a little bit too early because they issued another positive trading update a few days ago. The next company we're going to look at is Lendlease. Now, in November, the whole reason this came onto my radar was it pulled through a resistance level at $13.50, or actually gapped up above that, which can be quite powerful on good volume as well. So I became interested in Lendlease at that point. We were seeing a potential uptrend there, and I signified that potential uptrend with that sloping orange line. So the share price when I did the video in November was $14.39. So what has happened to Lendlease since then? Well, nothing much. In fact, that share price at $14.39 was the almost high in the share price since then. So the share price has gone backwards, and the time to sell out of Lendlease was in middle of December, when that support level at $13.50 was broken. At the exact same time, that trend line, the upward sloping trend line, was broken as well. So that was the ideal time to sell out if you were a shareholder of Lendlease. And really another uninspiring chart. Share price of Lendlease is doing nothing here, and this company is not on any of my watch lists at the moment. Next company on the list is Atos. This is actually quite an interesting company. I do actually like this company, but they were significantly affected by COVID-19. The share price did get hammered, absolutely hammered. And because they were affected by COVID-19, you would expect when all that positive vaccine news came out in November last year, the share price should have rallied quite hard. And it did for Atos. It went from 58 cents to 86 cents in a few weeks. And when I did the video in November, the share price was 86 cents. So was that a good time to buy into this company? Well, yes and no. So for me, it probably wouldn't have been, because what we've seen in the last 5 months, the Atos share price has been trading within a channel between about $1.15 and 86 cents. The good thing about 86 cents was that was at the bottom of the channel. So every single time the share price gets to about 86 cents, it then turns around and moves up. And every single time the share price gets to about $1.10, $1.15, the share price then retreats towards 86 cents. So I'm not a big fan of buying into companies that are trading in a sideways moving channel. I prefer an uptrend, but you know, horses for courses, whatever floats your boat. The next two companies on the list are both energy companies, Santos and Oil Search. And the main reason these two companies were included on my November video was because I was quite bullish about energy companies and energy prices moving forward from this period of time. And simply because we were getting that positive vaccine news, and these sort of companies should have been rallying quite hard. And we did see Santos share price go from $4.60 to a share price of $5.86 when I did the video. And I moved into this zone of resistance. And I was at this point in time thinking if the share price of Santos got above $6.20, that would be very bullish, because $6.20 was a very strong resistance level. And if the share price moves above a strong resistance level, that is quite bullish. So did the share price of Santos move above $6.20? Yes, it did. 5 days later, in fact. So there's the share price of $5.86 when I did the video, and a few days later it moved above $6.20 and has mostly stayed above $6.20 since then. In fact, the most recent share price was $7.06. So when it moved above $6.20, that was a potential buy, but not every potential buy needs to be buys. You can pick and choose. And I personally decided not to buy into Santos. I decided to take other positions in other companies. And you can really see the effect of that positive vaccine news on the Oil Search share price. In fact, it rallied really hard from $2.80, where it was just lingering around, not doing much, and it went from that level to $3.80 in 5 trading days on higher volume. And the main reason I included it in my November video was because it hit $3.80, which was a strong resistance level. And if it moved above $3.80 on strong volume, that would have been a very bullish move and a potential buy. So did it move above $3.80 on significant volume? Not really, because the share price of Oil Search oscillated around that resistance level for about a month before it decided to move above $3.80 in early January on stronger volume. So that looked like that could have been a breakout, but I don't think that breakout really came to fruition, because it tested $3.80 again about a month later, around the 1st of February. And ever since then, it's really gone sideways, and the current share price of Oil Search is $3.95, not that much higher than that resistance level of $3.80. So another quite uninspiring chart, so very similar to other uninspiring charts in this video. Next company I want to look at is Hello World, and this is another similar theme company to other companies I did showcase in that November video. Another COVID-19 recovery story, another company that benefited from that positive vaccine news that we did receive in November. And you can see the share price of Hello World break out 5 days prior to then I did the video at $2.20, and the share price actually kept on rising. I was being enticed to buy into Hello World at this point in time. I decided not to take a position. So did I regret not taking a position in Hello World? Well, it all depends on your time frame here. So the share price kept on rallying over the next 2 weeks. In fact, the share price went to a high of about $3.30. So all in hindsight, of course, because if I sold out at that high, I would have made some good money. But ever since that high of $3.30, the share price has been going backwards. And just like other companies in this list, another very uninspiring chart when I look at this. If the share price went below $2 here, that would be quite bearish. So at this point in time, Hello World is not featured of any of my turnaround watch lists, on any watch list in fact. So I'm keeping clear of these sort of companies right now until I can see some strength in their charts. And the final company on the list is Unibail Rodamco Westfields. This company owns shopping centres around the world, not in Australia. And because they own shopping centres around the world, this company, their business and their share price should have been highly affected by the pandemic. And it was. And conversely, because they were highly affected by COVID-19, any positive news when it came to vaccines or COVID-19 itself should have seen the share price rally quite hard. And it did. In fact, the share price of this company rose 40% on that day when we heard that one of the vaccines was highly effective. And that sort of rise in the share price for a company this size, market cap of $12 billion, is quite substantial, and it can lead to a significant re-rating in the share price in the medium to long term. So did it with this company? Was this the beginning of a new uptrend? Yeah, in a way it was. In fact, the share price has risen 33% since that day. But the day after I did the video, the share price went from $4 to $4.60. So that's a 15% rise in this share price. And since that time, the share price has been going up fairly slowly. So this is a company I'm not that excited about. It's not the sort of company I buy or would buy into unless the valuation of the company is very cheap, and I do see some value there. Right now, I don't see a lot of value in this sort of business. I don't like shopping centers. I do think shopping centers have to be fairly unique for me to buy into. I'm just not that excited. But just because I'm not excited doesn't mean you don't have to buy into these sort of companies. So that's it for this video. Hope you've enjoyed it. If you want to leave any comments, so maybe you hated this video, leave it in the comment section, and maybe I'll never do this sort of video again. Now, I'm not a financial advisor, so if you do need to seek financial advice, make sure you find someone who is qualified and can speak to your own financial needs. That's all. Have a good day. See ya.